Hey, it's Mike from Cross Country Mortgage. It's Monday morning. It's time for your Monday morning mortgage update for the week of September the 22nd. Hope you all had a great weekend. I had a great weekend. I was in Nashville this weekend on some business and listened to some amazing music on Music Row. It was quite an experience. If you've never been to Nashville and gone to Broadway and listened to music and danced, that's the place to go. That is the place to go. So, what happened last week? What's going to happen this week? Always try to give you insight about the market and how it's going to affect your decisions when you're buying a house, selling a house, working with clients to buy and sell a house. So let's talk about last week. Last week, big week. Why? Because the Federal Reserve met in their September meeting. It's a 2-day meeting. They always start on a Tuesday and end on a Wednesday. And then Jerome Powell, Federal Reserve Chairman, who's not going to be the Federal Reserve Chairman for long, has a press conference and tells all the media and everybody what they talked about and what their decisions are. Remember, the Federal Reserve sets economic policy, the US Treasury pays the bills. So they cut rates 0.25%. And we've been talking about this. I've been receiving a lot of phone calls, a lot of inquiries from clients and referral partners and business partners. Hey, rates are going to come down. What do I need to do? And as I've said in the last month, couple week Monday updates, that nothing really is going to happen this last week when the Fed cuts rates because the bond market has already baked in this estimated rate cut into the rates over the last few weeks. So that really is what happened. And if we look at the rate chart here, you can see on the right side that that big candlestick that is demonstrating Wednesday's trading, it's red, which means money flowed out of the bond market and mortgage rates actually got a little worse. So, how can rates get worse when the Fed cuts rates? Because remember, the Fed cuts short term interest rates, mortgages are long term interest rates. Red, the Fed cuts that short term interest rate, it instantly changes the rate that businesses charge or banks charge businesses when they borrow money. It instantly changes a credit card rate, a home equity line rate, a car loan rate, all short term financing. The mortgage rates are traded or determined by the trading in the bond market, which is what is shown here in the graph. So why did that happen on Wednesday? Because economic projections were also discussed at this meeting, and two things really are coming up here. The Federal Reserve said, hey, we're going to cut rates. Why? Because jobs numbers are starting to show a weakening economy, and the Fed is going to cut rates for two reasons. Inflation is getting under control and it's not going down, or the economy is showing signs of weakness. What the net result is by cutting rates is it promotes borrowing. It promotes borrowing, lower interest rates. People want to borrow money. So that's what they did because of the jobs numbers. But they also came out with the economic projections, which caused this large swing of money selling off in the market. So inflation, their economic projection for 26 and 27 is it's going up. Inflation is the death of mortgage rates. It cuts into the return on bonds. They also said that economic growth is positive, positive expected economic growth for the next 3 years. A strong economy is great for an economy, but it's not good for rates because if people have money, if there's strength in the economy, then we don't need to entice them to borrow money so rates stay elevated. And then retail sales last week were up, meaning we're all buying stuff. Consumers are still spending money on stuff. And so all of that combined together really allowed the market or forced the market to do a sell off on the bond market. But then you can see Thursday and Friday, it kind of equaled out. And even today, where my cursor is, that equals. I think the important thing to remember here is that we are absolutely in a better position we were since July of this year. This upward movement in this graph shows that rates have been getting better. So don't let a little disruption change your perspective on really what's happening over the long term. We're starting to see rates improve, and really it's a great time to either refinance or buy a house because the rates is as good as they've been in months. So what's going to happen this week? Well, we really don't have a lot of economic data this week that's going to move the market. The main thing is inflation. We've got a big inflationary report coming up Friday. We expect that inflation number to creep up. If it's at expectations, we're really not going to see anything happen with mortgage rates. If it's below and inflation comes in lower, hey, it's going to be a great uh, movement in the positive direction for mortgage rates, meaning down. If it's higher, then we're going to see rates go up. The other big thing that's going to affect the market is the Federal Reserve members. So they met last week. Now a ton of them are coming out and talking to the media and having their own press conferences and speaking at events. And are they going to stay in line with the message that came out last week? So we are seeing an environment in the Federal Reserve where there's a lot of disagreement. And what the Fed members say about how they think rates should be moved, how they think economic policy should be implemented, has an impact on the market. So we'll be paying a lot of attention to those Fed members and what they say, but really not a lot of economic data that's going to move the market. So we're starting with a locking position this morning and moving to floating if we see any change, but we just expect a ton of volatility. And we're not taking a chance with our clients' money. So if you have any questions about the market, don't hesitate to give me a call. I am a mortgage banker broker. I've been doing this 25 years, so I give you insight on knowledge, but I'm more than happy to help guide you in the mortgage process if you need help. If you know somebody who could benefit from this video, please forward it to them. Have a great, productive week, and we'll talk to you next week. Bye-bye.